So traders, there's a lot of things happening right now, and I believe the oil crash that I've been talking about for the last 6 months is actually on the way. And I believe we're getting ready for some really a lot more downside to come when it comes to the oil market. Something I've been talking about now for the last 6 months. And also when it comes down to the stock market itself, guys, we're getting to a very interesting point right now. And I want to share with you what's going on there right now. Also, gold is actually creating a bit of a V-topping action in the markets. So we could be getting ready for a lot more downside to gold, plus a few other things I want to share with you. So let's get straight into it, guys. Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. So traders, one thing I want to start off with is I've been getting a lot of people asking me if I can help them out here. So what I'm doing right now is for the first 10 people only, I've opened up. I don't actually normally do one-on-one coaching calls with people. I only do people that are in my inner circle program. But what I normally do, when I normally do one-on-one coaching calls, I charge $1,000 because that's what the value what you get on these calls. But I'm doing it for $199, so basically 80% off. Plus, I'm giving you access to the Master Trader Lab for free, lifetime access to the Master Trader Lab for free. So if you are having a hard time right now and you need some help, maybe need some guidance around these markets and you just want to talk to me personally, then this is your chance right now. I've opened up 10 spots this week only, and through the demand, I know this is going to go really quickly. So that first link in the description, click on that. You can go get access to the 80% off, to get access to the coaching call. Plus also I give you lifetime access to the Master Trader Lab. First 10 people only, guys, so go check that out. First link in the description. So one thing that you probably saw on the thumbnail was this oil market. And this oil market that I have been focusing on, I've been focused on this now for the last 6 months, and for you guys have been following me now for the last 6+ months. You would know that there's been a big theme around the oil crash coming, right? And you would know that. And so we're actually getting under the way right now. We're starting to see this sort of crashing formation starting. And if we see this through here, we can actually start to see that it's actually the breakdown has started. And now I believe the overall crash is happening. Now, with a crash, we will get this. The market will step down. It's probably not going to just keep going straight down. Okay, we're probably not going to see a bit of a waterfall. I do believe this breakdown now is the signal to see a lot more downside to come out of this oil market. And one thing that we can see through here is now we've got the breakdown. I believe we're likely to start to see more like stair-stepping motion. So if I squeeze my charts right up here, you can see this is the big picture here, and this is obviously the trend line coming down through there somewhere, like that through there. So what we're probably likely to start to see now out of oil is we did get the breakdown. I believe this is the start of the crash. Now remember, all a crash is this. It simply just means that we get a little bit of a rally, and then we go down for a bit, we get a bit of a rally, and then we down. Like this is basically a crash, right? We will get these swinging motions through here. This whole point through here, this is COVID. That's a black swan event. We typically won't get that type of action. I don't believe. I could be wrong. Right? This could be the start of a bit of a waterfall out of the oil market. But what we're probably likely to start to see, we did get a breakdown now. And so we're probably likely to see a bit of a pullback from here, out of the markets from there, when looking at when looking at these movements in the markets, right? So we did get a nice breakdown. We're probably likely to see that, but I believe this is the first sign now of I've been talking about get ready for a really big drop on the downside of oil. We have now just broken down past this level of support. And so that's given me the trigger to really keep an eye on oil now every single day, because if I can get a good trading setup that I look for in my actual trading setup. And guys, in that free trading course, I think it's the second link in the description there, I'm giving away free access to a trading course. And part of that trading course, I actually teach you my trading pattern that I look for, my number one trading pattern. So if you'd like to get access to that, I'm giving away free access to my trading course there. And that's that second link in the description. I also teach you about my number one trading pattern I look for. in the oil market, and that's what we're seeing through here, guys. We're really starting to see this thing break down now, and I believe there's going to be a lot more exciting times to come out of this oil market here from that perspective from there. So one thing I really want to, or let's actually, now that's the oil market. Let's go look at gold and silver right now. And one thing that one thing I really want to sort of share with you when it comes to the gold market here is this. Okay, the gold market with this market here. One thing I've realized over my last 20 years of trading the markets is all markets create similar effects of these markets. Now, what am I talking about here? The patterns that form on an individual stock, that form on a commodity price, that form on the indices, or form on the futures markets, the markets really operate similar ways across these markets. So what am I referring to here? What I'm referring to here is that I've started noticing that there's been, in these very big sort of bull market environments we start to see what's called like a V topping action in the market. A strong move up, and then we get a strong move down. We start to get that type of action typically at the start of a top in the markets from here. And so we're starting to get that through. Now, it doesn't happen all the time. Sometimes you will get the V tops, but due to the nature of how much we've been going up through here when it comes to gold, and by looking at what's called the, let me just bring this chart up here. When we're looking at the gold market from here, you can see that we've just been stair-stepping all the way up. We are definitely too far away from the moving average. And as you know, when we get too far away, we come back to it when we get too far away. That's where traders, if you're looking to get in any market from here, the number one thing I can tell you, if you're looking to increase your odds even more, forget your indicators. Just put on a simple moving average. This is the weekly chart I'm looking at, and I'm using a 24 moving average. And if we start to get too far away from it, up or below it, we know that it's probably a bad time to go long here. Probably a bad time to go long here. We need to wait for the market to scoot back to the moving average, then look for longs, scoot back, then look for longs, scoot back, then look for longs. So we're probably going to get at least that scooping back before we start to see potentially another leg to the upside, or this is the overall sign of a lot more downside to come out of that level there. So we can see that through there. If I go to this level through here, we can see we're getting this sort of V topping action in the gold market from there. So this could be the potential start of a movement on a lot more downside to come, especially after this crazy move to the upside. Exuberant prices to the upside. Let's go look at the good old silver market now. And silver market is one of those markets that, for me personally, I am staying away from. There's just this thing is a wildcat right now, up and down, up and down, up and down. And whenever you do get high volatility in any market, my suggestion is stay away from that, because it's very, very unpredictable. And this is where you can get your face ripped off, because before you know it, looks like it's going to go up and then it goes down. Before it looks like it's going down, then it goes back up. It's like very volatile times. Stay away from very volatile times. Sit back and wait for that market. This is for people that are looking to trade. You know, you're looking to get in, get out, so on and so forth. That's for those people that are in the markets that way. So that's what I'm seeing there when it comes to the good old silver market now. So now we've done that, one thing I really want to share with you here is by utilizing what I've taught you guys so far, right? And that is this here, right? So this is the 24 moving average on the weekly charts, okay? And we talked about this before when it comes to gold here. And we know when we get too far away from it, we end up at least getting a pullback or a sideways period, allow for the moving average to start to catch up. Okay, we see this, what the market does, and that's the reason why I've been calling for warning signs out of gold, and this is why we're probably going to see a lot more downside, probably at least another good, at least another 10% drop on the downside for this thing to start to come together. So within that being said, it also works on the downside. So if I bring up, say, the Dow Jones here, the Dow Jones and the actual stock market, you would know one thing here when it comes to the same thing that I'm talking about here, is that we don't get too far away from the moving average, even on the downside, before it starts to become a little bit of an elastic band and we start to get a retracement back up. So we can see here that look how far away we are from the moving average. Doesn't mean we can't get a little bit more downside to come, but we're getting very close towards it being too overstretched on the downside before we start to get some form of a rally. Even in the COVID crash, you get too far away and then you get the bounce. So if I looked at this low point through here, and that was the low point from there to there, we can see that we're getting very, very, very close. Now this was a black swan event, right? This is a black swan event through here. Now we're getting the similar sort of movement on the downside. This here represents how far away we were from the moving average before what? Before we actually found, see how far away we got from it? This is now saying we're too far away from the moving average. Now this is a weekly chart, by the way, so every single one of these bars represents 1 week's worth of action. But as you can see, when we got down to here, it was only a matter of probably 2 months before we see the rally back up towards where it was just prior to this level here. And then a matter of 3 months and it made a new high, and then away we go from there. So the purpose of me saying that through there to there is, as you can see where we are right now, is that was the COVID, black swan event, and look where we are right now. This has happened once through here, and I'm trying to see if I go back in time. I'm trying to see what was the maximum. So this here was the maximum distance away even through this whole 2029 period. Okay, so that was the maximum distance away. I'm trying to find the maximum. Look at that through there. That was the maximum distance away, wasn't it? From there to there. That was actually a little bit smaller. That looks like it's getting pretty close to the maximum distance. See what I'm doing through here? So the maximum distance away from there to there. So as you can see that the anomaly is, if this gets if we now start to get too overstressed, the anomaly is this level 3 here. Right, so let me see if I can I'll change this to a green. Actually, let's just change it to a bit more of a darker green. So this is the green here, okay? This is the anomaly. This is the maximum distance away it's happened in the past, roughly there before we started to find a bottom. Makes sense? So that's the anomaly of what happens in the last couple of years. And again, I'm trying to see, even through here back in 2016, let's create this level. Notice how that didn't even actually get that far away, did it? That one there was that point through there. See what I'm doing through here? I'm trying to get the that was sort of the maximum distance away. Yeah, we got a little bit of a wick here, but this is where we actually found the bottom through there, as you can see, and the same through there as well too. Roughly the same sort of, so we're getting now roughly the angle of how far it gets away. How do you use this in your own personal trading? Well, if you're looking for shorts or longs, we can see that the high probability of how far it gets away from the moving average before we start to see the rebound, right? The rebound of at least the movement to the upside. And if I bring this back to here, we also can see we had stuff through here. So let me actually go back to here now. And now we can see we've had this here. So it looks like to me that was sort of the maximum distance away before we found the bottom. So that looks like it's probably through there. So it looks like this green line here represents the anomaly, which means that was the furthest distance away it happened in the COVID crash. And the average is this blue line here, right? That's the average of how far away we get from the moving average before we actually start to see that. And now we can see we're actually a bit below that through there. So, or actually we're a lot below this level here. So we are getting a bit of a freak out. That tells me that if we have a little bit more to the downside, and now if I go back to this chart here and bring on all my trend lines, you'll be able to see where we're at right now by these trend lines here, which simply represents what? If we do get a little bit more downside to come, if we have another movement on the downside and we get something like this here, like that, and then like that, you know where we're getting towards, right? This is probably going to be a very significant area before we start to see the turning point, because we can see by looking at that weekly chart once again. This weekly chart here, it tells us that we're likely to get that. And even back in, even if I go back to the 08 period, let's actually go back to the 08 period. Actually, I'm gonna create this over here. I'm gonna go back to the 08 period when this was the financial crisis, and let's actually see what were the maximum distance away. Oh geez, look at that through there, right? That was the maximum distance away from there to there. That was the maximum distance away, and then we had the COVID move there. Isn't that interesting? That actually seems quite small, doesn't it? Let's now go back to here. And that actually seems quite small, doesn't it? Now, and then we have these maximums. So as you can see, right, the average, even by looking at the last 20 years, you know, this one here was, as you can see, that was that point through there to there, roughly from that point there. As you can see, if I bring it back to here, you can see what I'm looking at here, right? So over the last 20 years, actually longer than that, what am I looking at here? Back since, what's that, 30 years? Maybe. A long time, right? Long time. You can see the average distances before the market gets maximum distance away, which is now oversold before we at least get a rebound. So the reason why I'm expecting a strong rally out of the markets is because of what I'm sharing with you. I'm utilizing this technique here. Now, once again, how you utilize this technique and how I utilize this technique is if I'm looking for short signals and I start to get these movements on the downside and I get too far away from the moving average, I know it's a low probability time to get involved with it. Actually, it's a very low probability time because I know that there's a certain distance away before we start to get at least that snap back towards the moving average. So we know the blue line here is out, which is the average anyway. And now we're getting this line through here. So we're through there and we may have just a little bit more downside to come, one more push, and then we may be getting ready for the rally. So the rally is going to start real soon because we get this too far away from this level through here. And you use this on all markets, even the S&P 500. Right, so if I go back to the COVID crash on the S&P 500, that was the low point from there to there, as you can see. And again, it's not an exact science, guys, but what we're doing here is giving us the probability of where may be the bottom be here, at least for the short-term level, right? Where may be the bottom before we start to get that rally back up? Because we will, right? We can see the market will start to get the rally back up towards the move, and the moving average and the market starts to come together. You do get that, right? That's that level from there to there. That's the maximum distance away. That was pretty close through there. So if I'm looking at the maximum distance away, look at that through there, right? So that was COVID from there to there, and now we're getting this level from here to here. Now you can see we're actually a lot further on this one here. So is that true? Is that right? Let's just make sure that's true. Yeah, look at that there. So the maximum, that's an average, right? It's an average area of what we're looking at through here. So this is my overbought, oversold signals that I like to get in the markets, because the market is telling me that now we're too overbought, oversold. And once again, the best thing to utilize when it comes to this level here is if you start to see this here and it's too far away, trying to go short here is one of the reasons why a lot of retail traders lose money, because they wait for this and then they get in, but they don't realize that it's now overbought, oversold, and all that down home country goodness from there. So we can see this level through here, and we can see this through there. And again, guys, it's not black and white, but it gives us if we're looking at probability here, we know that if we're looking at maybe probability, there might be a 20% chance that it does keep going down, or 10% chance it keeps going down, and there's probably an 80 to 90% chance that over the next coming weeks we're probably going to start to get something like this, and at least get the moving average coming out here, and we start to get a retracement back up towards these levels from here to here, right? Because we want to do everything we can to stack the odds on our side even more. So at least a really nice strong rally is probably going to come out of the markets from here. If I look at the NASDAQ 100, and I do something really similar here as well too. Again, I'm just looking at the maximum distance away. But this is the maximum distance away. We're very oversold. There's a lot of fear in the marketplace. I wouldn't be too surprised, guys, over the next coming months, we start to see a very good scooping action just because we're oversold. We're due for at least a bounce. If this is going to be the top, guys, we will, one, get the bounce, but then two, we'll start to create an actual massive rounding top formation. This is what we will get from here. But initially, we will get some form of a bounce over the next few weeks. And when that happens, then we need to see what is going to come out of this level from here. So this is what I like to use, guys, for myself. When I'm looking at the markets, I'm like, okay, then are we ready for some sort of bounce? Are we pretty oversold right now? What are we looking at this here? This one keeps me away from, if I'm looking for short signals down here, tells me not to do that because you're probably going to get your face ripped off. And two, we're probably likely to see a bit of a bounce here. So you can see what's happening. So over the next few weeks, as this starts to unfold, you're getting ready for that and potentially taking advantage of what could be getting ready for a really good strong rally. And even from this level here, we could be getting a good 18-20% rally out of the NASDAQ, which could create some really good opportunities, at least for the next 2-3 months as that starts to unfold. So I've just recorded a brand new trading course and I'm giving you a free access to this. This is broken down into 4 different parts. Part number 1 is about the foundations, the biggest mistakes you're making right now, what goes into a good trader. Part number 2 is about the chart reading techniques that's been working since the 1950s. This chart reading, part number 3, advanced chart reading, is about the techniques that I've actually only learned from my Millionaire Mentor, not from books. And then also my number 1 top trading system in mastery. I give you all of that for free and I'm giving it to you. So go to johnsfreegift.com right now or click on the very first link in the description.